Hello and welcome everyone to the National Academy of Social Insurance's virtual event today. My name is Rebecca Vallis. I'm the incoming CEO of the National Academy of Social Insurance. Unemployment insurance is a critical part of America's social insurance fabric, and it's also an essential part of the nation's economic toolkit. But as we're all very aware, the COVID-19 pandemic exposed significant cracks in the nation's unemployment insurance system, ranging from massive technology failures to a core administrative structure that frankly was not up to the job in the way that we might want it to be when it comes to doing a lot of the core functions of that unemployment protection system. And so the National Academy of Social Insurance in 2020 convened a task force called the Unemployment Insurance Task Force that now has spent the past several years looking at lessons learned from the pandemic, solutions proposed over the past few decades, and the vast knowledge base and range of its incredibly diverse members' views. And now we're incredibly excited that the Unemployment Insurance Task Force, which is comprised of 24 of the nation's leading experts on unemployment insurance, ranging across the political spectrum, has finally released its report with the goal of helping policymakers and media and the public understand what policy levers exist, how they work, and what the trade-offs are for each one. And we have an all-star lineup for you today to discuss that report and the road ahead from here when it comes to modernizing unemployment insurance. So I'm incredibly excited and grateful to get to introduce and hand things off from here to the principal investigator of that task force, a dear friend and a wonderful colleague, Michelle Evermore, who I expect is no stranger to anyone who cares about UI, as truly one of the nation's leading experts and voices on this issue. Michelle, thank you for your incredible leadership of this task force. And without further ado, I'm excited to hand you the mic to moderate today's conversation. Michelle?
Thank you, Rebecca, and thanks to the Academy for everyone's really hard work over many years to make this happen. As Rebecca mentioned, in 2020, this task force got started in the midst of the pandemic. Its shape has changed quite a bit over time, and I just want to recognize the original principal investigator on this project, Stephen Wadner, who published a book that was greatly influenced by some of the early conversations of the task force. David Balducci and I wrote a lengthy review recommending this, wrote a review highly recommending this book. So, please do check that out. I was originally a co-chair, but I moved into the administration and came back as principal investigator on this project. So, these are conversations that have been happening for a while. One of the most important shifts was shifting the political makeup to be more broadly inclusive across the political spectrum. This has improved the conversation dramatically, becoming both more thoughtful and more realistic and useful. Using the standard Academy disclaimers, I must acknowledge this is not an advocacy document. There are no recommendations. It's a discussion of policy levers that are available, reviewing decades of ideas about policy levers, including significant discussion of recommendations made by past federal bipartisan commissions, academics, and other UI experts over the year. I am deliberately not giving away too much of the contents of the report here because I would love for you all to go and read it. But I want plenty of time for our panel also to discuss their views and hear your questions from the audience. But broadly speaking, we looked at several categories of reforms, including administrative and technology issues, reemployment and keeping people connected to work, fraud prevention and detection, duration of benefits and extended benefits, initial and continuing eligibility, wage replacement levels, financing, and special programs such as work sharing or So the task force has agreed that we need systems to be better tooled to provide the right people, the right benefits at the right time, while supporting good stewardship of public dollars. We also had many good discussions about making unemployment insurance a better tool to help connect people to suitable replacement jobs, which is optimal for both workers and employers. Before we get to our panel, I want to express my deep gratitude and admiration for federal and state agency staff who've worked on unemployment insurance. These are people who have borne the brunt of the crisis, out of the spotlight and got benefits to a desperate public in the height of the COVID pandemic. They faced the sophisticated criminal crime rings attacking the system, and they did it without enough support. So I want to acknowledge that, and also the tireless efforts of congressional staff and state legislative staff who have worked tirelessly on these issues over time. Speaking of federal staff, I want to now bring in Andrew Stetner, who is currently the director of the Office of UI Modernization in the U.S. Employment and Training Administration. We've worked together closely throughout the pandemic and even before, particularly on technology modernizations. Andy, let us know briefly what you were up to at DOL and what we should be thinking about going into this conversation.
Well, good afternoon, everyone, and thanks to Rebecca and Michelle for inviting me, and to all who served on the UI panel and all the members of the National Academy of Social Insurance. Let me start by saying, when called on, the unemployment insurance program delivers. During the pandemic, 53 million Americans benefited from UI, and actually Federal Reserve Bank economists credited UI with the strong recovery that ensued. And even when the economy is good overall, from natural disasters like the Maui fires in Hawaii, to plant closures in Maine, UI is there as a first responder. But as Michelle alluded to, the pandemic exposed longstanding challenges in the UI program, especially administrative funding and technology. Indeed, we talk about the pandemic as a perfect storm for the program's vulnerability to fraud and customer service. Claims spiked to record levels, and states weren't forced to implement temporary pandemic programs that didn't have any of the traditional checks and balances, in place that are used to assure payment accuracy and timeliness. So these challenges definitely created a mandate for change. The American Rescue Plan Act included $1 billion for the department to help states modernize UI technology and processes. We acted quickly, established expert tiger teams that looked under the hood at state operations, and recommended concrete changes that states could undertake to pay benefits more accurately, faster, and fair. And right now, there are over 500 grant-funded projects underway in the states, each of them tackling discrete challenges in the system. And these individual projects, they add up to the start of a big change in the UI system. We haven't stopped there. We've taken the lessons from the American Rescue Plan Act and the pandemic experience and issued a plan that we call Building Resilience. It's a plan to transform unemployment insurance. It's our roadmap for our efforts to transform UI. We have actions in 7 areas, including administrative funding, equitable access to benefits, customer experience, financing, and fraud prevention. Within this strategy, there are 53 strategies that we're taking in collaboration with the states, including 41 that are underway. Critically, the states and the department can't do this under the current statutory framework. That's why reports like today are so important. Our plan includes legislative recommendations that are really going to unlock the potential for transforming the UI program with the states. This plan is a response to the GAO's designation, the General Accountability Office, of the US system on its high risk list. The system was placed there both due to the high level of frauds and the challenges with benefits delivery and system infrastructure. When we talk with GAO about this designation, it's not the Department of Labor, it's not the states that have been put on high risk, it's the entire system. And we can't graduate from this list unless the entire system, including all of its stakeholders, DOL, Congress, the states, and I venture to say policy leaders, worker advocates, and businesses all work together to start improving this system. We can do this. Earlier this year, a bipartisan group of senators issued a framework for important immediate improvements in the UI program across program integrity, technology, and access to benefits, echoing many of the ideas in the president's budget, and dare say in advance in even your report. In April, our secretary, Julie Su, she challenged stakeholders who had come together to discuss our transformation plan here at the Francis Perkin Building to work hard to answer the hard questions, propose innovative solutions. And I'm very grateful for the hard work you've done in this report to identify those common concerns, policy options, and areas for further exploration. We're pushing our team here at the Department of Labor to repair the UI safety net now, when times are good, so it can deliver nationally when times are bad and it's needed the most. But we certainly can't do it alone. We need your ideas today, and your engagement tomorrow to turn the momentum for building change into the system we need for lasting transformation. So we're very excited about this report, excited for today's conversation, and grateful for all the stakeholders that have come together and shared ideas and developed some common themes and thoughts. Thanks so much, Michelle.
Thank you, Andy. Thanks so much for being here. We really appreciate it. One addition, I recognized, the hard work of federal, state agency staff and congressional staff. I also want to highlight Congressional Research Service and the tremendous resources. I think they've taught us all what we know about unemployment insurance. So I wanted to recognize you as well. We have a couple of co-chairs on the panel. Till Van Wachter should be joining us. He might be having some technical difficulties right now, but he is a professor of economics at the University of California, Los Angeles, and faculty director of the Policy Lab at UCLA. Julia Simon Michel is also a co-chair and is the supervising attorney of the Unemployment Compensation Unit at Philadelphia Legal Assistance. Matt Whitinger with the American Enterprise Institute has been a very involved contributor to this report and has done a great deal to make it better. He also served as a longtime senior staff member on the House Ways and Means Committee working on unemployment insurance policy. And Indi Dattagupta is the recent past president of and executive director of the Center on Law and Social Policy, and was the co-director of the Georgetown Center for Law and Economic Policy, and has worked for the Center for American Progress, and has also worked on the staff of the House Ways and Means Committee, particularly during the Great Recession. So I'll kick us off with one of our co-panelists. Julia, what are some of the top challenges that your clients have had in accessing benefits throughout the pandemic? And what has improved and what has gotten more challenging since 2020?
Thanks, Michelle, and thanks everyone who has joined us today. This report has been a long labor of love. Over many years, we asked a lot of people who are experts in unemployment to come together during the busiest times of their life, the pandemic, to work together to come to some policy options. And we're grateful for everyone on the task force who has participated and stuck around to get to this point. When it comes to jobless workers and accessing the unemployment system, what we often see and what we saw at the beginning of the pandemic was a lack of awareness of the unemployment system itself, that it is there, that it is something they can qualify for, that it's available, and especially in states that have higher rates, just how vital it can be to stabilizing them during times of uncertainty. I will say here in Pennsylvania, one thing that we think helped a lot with awareness of the system is that we have an employee side tax. And so folks see unemployment come out of their paycheck every week. And so they very much understand that this is a system for them, and led to a lot of people applying very quickly here and continuing to apply much more so than in other states. Even when you know that the system is there, one thing that we have talked about at length in the task force is how difficult the actual initial applications are for this system. Many states don't have a application that is mobile friendly, and the vast majority of people trying to apply for benefits are using their phone to do it. They would much prefer, many of them, to be able to call and speak with someone to file an application, but that has become less and less common in states across the country. I'd suggest that anyone here who's trying to think about ways to improve the unemployment system, try to fill out an application on your phone. Even those of us in states that have mobile-friendly systems, it is a lot of information. It is incredibly complicated. And it takes a very long time. We help people with applications. It can take an hour and a half to fill out an unemployment application. And even more, again, difficult when you're trying to do that on your phone, which is also where all the other information you need lives, and trying to switch back and forth between screens to do that. So people just access this.
You just went on mute, Julia.
Oops. Thanks, Michelle. Once they do that, then as we talk about on the report, the system is incredibly complex, and understanding what you need to do and when you need to do it and how to do that correctly is incredibly difficult. This was never more clear than during the pandemic, when we saw lots of individuals who had work history in several different states and were getting reemployed in different states, trying to figure out which unemployment system to be in, what they had to report to who, when they had to report it. And there are just landmines kind of left, right, and center for hardworking Americans who are trying to access this benefit. In terms of ways things have improved, obviously now that claims have decreased, agency staff is more available, right? Folks want to talk to a human, right? At the end of the day, I've encountered almost no unemployment claimant who doesn't want to speak to a human about their claim to understand better what is going on. More people can now reach humans to do that. One great example of that is Pennsylvania used an equity grant from US DOL to launch in-person services at their American Job Centers called Career Links. And that we now have unemployment merit staff at job centers at least 2 days a week across the state. And people can access in-person support for unemployment. And that's a fantastic program. It's something Pennsylvania has continued now past the equity grant. On the other hand, I think while folks became more aware of unemployment during the pandemic, I think one thing that is a challenge now is that there are a lot of overpayments coming out from the pandemic that were caused by the confusion that people had, that they didn't know what to do, they couldn't get answers. And now folks are a little scared of coming back to the unemployment system. They're worried that it feels like a gotcha system and that they're going to get in trouble with whatever they do because it's just not clear to them. The last thing I'll say in terms of current challenges, and we've talked about this a lot on the task force and other spaces, is the introduction of identity authentication into the system. And by that, I mean digital identity authentication, because there's always been some form of identity verification in the UI system, especially for regular unemployment, where there's a back end where employers are confirming eligibility. Our clients struggle mightily trying to do digital identity verification, and it's something that we keep close tabs on. And I know we've talked about the kind of balance in this task force between fraud prevention and accessibility. And I think that is one of the areas where we're still really struggling to get that balance correct.
You segued perfectly into my next question, which is for Matt. You've recently published a super interesting and helpful publication on fraud identification and prevention. And I was wondering if you could talk to us a little bit about what you think would help us be smarter about fighting fraud in the system.
Sure. First, thank you. Congrats to the Academy. Congrats to Michelle and her team for what I think is a really good report. Some of us on the right sort of tend to cringe at bipartisan reports and commissions and things like that. I think this one is actually quite balanced and does a very nice job presenting all the material without sort of advocating for a particular point of view. And so kudos to the Academy and to Michelle and her team for that. In terms of fraud, so Michelle, you mentioned it, recent years have seen really unprecedented levels of fraud, international crime rings, based in Russia, China, Nigeria, Romania, elsewhere, plus small-time criminals, insiders, you name it, participated in attacking the UI system. They took advantage of a whole lot of factors, but a lot of them were really novel to the pandemic because of the pandemic response. So one of the most used programs was something called Pandemic Unemployment Assistance, or PUA. That allowed people to self-certify their eligibility for benefits. It failed to initially confirm prior work histories. It failed to confirm identities. Basically, it left the door wide open for individuals to kind of make it up and use stolen identities that are readily available on the dark web to apply for benefits in other people's names. The additional $600 per week supplements that were originally paid at the beginning of the pandemic, basically created an even larger and more inviting target for the sort of rip-off artists and the international crime rings. If you add all that stuff up, for somebody who was consistently eligible for just average unemployment benefits across the country during the period when federal benefits were available, so like basically March 2000 to September 2021, again, the person collecting average benefits plus all the federal supplements could receive $46,000 in total unemployment benefit checks pool was a little bit less than that if you were collecting average pool benefits, something in the $30,000 range. But still, those are enormous numbers, and those are huge targets for criminals bent on defrauding the system. And meanwhile, as Andy mentioned, the states took down some of their sort of normal anti-fraud practices. So if a state previously matched its unemployment benefit rolls against a number of individuals in jail, in the interest of getting benefits out quickly, some states took that down. And so not surprisingly, those sort of weaknesses were exploited all over. Add it all up, and the official numbers that the government officials have admitted in terms of improper payments, which is broader than fraud, but improper payments, sort of captures the sort of general domain, is $200 billion. There's private estimates that suggest as much as $400 billion out of $900 billion in total benefits paid during the pandemic were improperly paid. Fraud, $100 billion. I mean, we will literally never know the actual answer, but to put it in terms of in some perspective, that's out of 30. That's compared with a UI system that in normal times spends $30 billion on annual benefits. So you're talking huge, huge numbers. The task force report briefly reviews some of that. Thank you for the plug for my report with task force member Amy Simon, which goes into much more detail. The report covers some of what can be done. Congress is actually doing some of that, or debating at least some of that, in terms of things like, as the task force report mentions, allowing states to retain some of what they recover in terms of improper payments to be used for strengthening program integrity. I think that could help. We'll talk more about administrative funding down the line. Speaking just for me, some of the things that we should do going forward is basically don't do the stuff that we did during the pandemic that opened the door really wide. So no more self-certification of eligibility benefits, confirm identities before benefits are paid. Don't give large flat benefit increases that create these inviting targets. So the report discusses how all of that goes well beyond the UI system, which is also absolutely correct. And so really what that kind of tees up is there's a need for vigilance within the UI system and additional changes and reforms, but it goes much broader than that to the rest of government, which will hopefully, if other programs and agencies take this seriously, will help the UI system improve how it operates too. So let me leave it at that.
Thanks. Indy, so since a lot of this report centers around past recommendations, you were an author of a really comprehensive paper in 2016 that called for a variety of reforms. Can you talk a little bit about that and how, reflect on that as we look at the report that came out yesterday?
Absolutely. It's great to be here with you, Michelle. And thanks to you and everyone on the task force for finding both, I think, at least areas of common background, context, facts, right? And also some really useful options for moving forward. When I co-authored a report several years back with folks at the Georgetown Center on Poverty and Inequality, National Employment Law Project, and Center for American Progress, we were also responding to lessons learned from a crisis. In that case, it was the 2007 to 2009 financial crisis. And I think both reports clearly are taking the lessons learned from the past. That's a central sort of value added for both reports, because I think we have conversations. Sometimes there are bills, but they may be messaging bills introduced in Congress. But to really synthesize and put forward options for policymakers to consider based on the actual evidence is really useful, having been on the side of working as congressional staff like Matt. So I think in that sense, both reports really tried to find where there could be some consensus, again, not necessarily in the policy, but at least on some of the basic understandings of the challenges, and where there could be some clearer lessons learned. And the report that you all are releasing today unquestionably moves the ball forward in those ways. I think that one of the bigger challenges we face, in addition to the fraud issue that Matt laid out compellingly, is the challenge of administration technology. Not that that hasn't always been a challenge, but it was really surfaced in this last pandemic-related recession. And I think this report does a much better job moving things forward there, partly also building off of real work that you, Michelle, Andy, and others have been doing, including an actual execution in partnership with states. So that area rightfully has received far more attention in this report, and I think that was a great decision because it's also an area that's ripe for making progress at the moment in our political ecosystem. The thing I would just note is that then and now I find finance to be the biggest sort of pitfall. Now, to be sure, the annual appropriations that the federal government is supposed to make to adequately fund the state systems is a major challenge. And one where I think this report adds a lot of value in potentially getting us to a better place as we've allowed the state systems to really deteriorate, despite some important one-time funding. Andy talked about some of that himself. But at the end of the day, it's hard to see an unemployment insurance system that meets its twin core purposes of helping working people when they've lost the job through no fault of their own and stabilizing the economy without significant shifts in our financing. And there are a lot of options, and I really appreciate that the report acknowledges that issue and those options. And actually, I think one of the greatest value adds of this report, which has been done, I think, much more effectively in some ways than we were able to do 7 or so years ago, is that this report makes very clear that ideally unemployment insurance reform would happen comprehensively. And that is especially important because, as we know, there's a lot of rational actors, especially the states, who will respond in different ways to piecemeal shifts in federal policy. And some of those ways may undo some of the very purposes of the federal policy. So I will sort of close just by saying that both reports really, I think, help move the needle forward. This one being more bipartisan, cross-partisan, and yes, maybe not making clear recommendations, but at least adopting, I think, what look like a consensus understanding of the challenges will add a lot of value in this particular moment.
Thanks. I appreciate that. Matt, building on one of the things that Indy raised was, administrative funding. Can you talk about your recent commentary on UI administrative funding and some ideas to improve how we think about? You use the phrase that I love, and I use it all the time too, is fixing the roof while the sun is shining.
Sure. Yeah. So actually, that's an old Charlie Rangel quote, and I'm not given to quoting Democrat politicians like former Chairman Rangel too much, but I think it's a very apt one in this case. And it was something that's discussed at a Ways and Means hearing last month, and so I think it's appropriate. So basic idea is when you're reforming and making necessary major system improvements, you should do that when benefits are low, right? So I mean, this is sort of 101, not when benefits spike, as in a pandemic. In some ways, during the pandemic, we actually did the opposite, right? So there was this natural surge in demand for benefits for the regular UI system, and Congress intervenes, with the best of intentions, and creates brand new federal programs for states to administer that had a lot of these sort of administrative issues, let's just say, and sort of made it worse. So in effect, to continue the metaphor, when it was pouring down rain, it was like Congress created holes in the roof, as opposed to what we're suggesting, which is now would be the right time to make these sort of administrative changes. All that showed in the fraud and abuse numbers that I and others talked about. And so the policy questions really kind of involved what Indy was getting at, which is what's the right administrative funding for the UI system. This is ridiculously complicated for people that don't do this work all the time, and I'll try to sort of translate a little bit and do sort of a short version. So the federal side of the UI system is where the administrative funding comes from. That comes from a federal tax called FUTA. If you're really anal and you look at your pay stubs, you'll see FUTA on there. It's 0.6 of the first $7,000 in wages, which means $42 for most people a year. That goes into the system. That collects about $6 billion in revenue. The system then leaves it to congressional appropriators to send that money back out. Lately, they've been sending out $2 to $3 billion in money to administer the system, and the rest of it kind of gets lost in Washington. It gets credited to trust funds, but we all kind of know how that works. It gets spent on other priorities until the trust funds are drawn down when needed. But the long and short of it is, I think there's sort of a broad consensus that this system isn't providing appropriate support for the administrative needs of the system. And that's the like big picture number. Then there's the question of how much do individual states get back for of that $2 to $3 billion. And that kind of boils down to Washington formulas, something called the resource justification model, which is based on current benefit claims. None other than Gwen Moore of Wisconsin actually kind of attacked the RJM model in the recent hearing, where she said that it shortchanges states that help UI claimants return to work more quickly. And she's right? The fewer claims you have, the less administrative money you get, which on one level sort of makes sense. But on the other level, if we want this system to help states prepare for the future and surges in claims and crises and recessions and all that, that kind of backward-looking system really doesn't fill the bill. So right now, every single state in 2022, I think it was the most recent year I looked at, is a loser in terms of the taxes their employers pay in versus the administrative funding the state gets back to administer the system. Even in the pandemic, even in FY 2020, when we had literally the highest benefit claims ever, the RJM system created only 11 winners out of all the states in terms of the taxes paid in versus the administrative money sent back out. So something's kind of amiss with that backward-looking system. The report offers a couple of options, and basically they're all designed to do the same sort of thing, which is to better line up the revenue coming in with the administrative funding going out. There's three. One is kind of job-owning appropriators to provide more money. Doesn't really get into the how big are the slices of the pie for the individual states issues. If it's successful, it's likely to be sort of a one-time thing, so it's not like sort of built into the law. There's complexity with that. The other is sort of setting a floor in terms of a percentage on how much states would automatically be guaranteed to get back. Part of the problem there, and this gets really complicated, is that actually creates an entitlement. So it seems to cost way more than it actually costs. And then the final one, which I've actually proposed to the Ways and Means Committee in testimony that I submitted last month, is basically let the states figure this out, right? Say to the states, hey, look, you figure out, subject to some reasonable floor, how much you want to collect in taxes for this purpose to administer benefits, and let them do that. That's, like I said, my preferred option, which minimizes deficit effects, but it also promotes equity in terms of what states pay in and get back to administer the system. It would keep a lot of money from sort of sloshing around in DC and being lost to the UI system, at least temporarily. And then, the states really wouldn't be in a position where they would just blame DC, right, like they do now for administrative funding failures. No matter what, I think the general point of your question is right. Now is the time while the sun's shining and it's 95 degrees and sunny in DC today, but more generally and metaphorically to actually address this stuff before we get into a recession and claims start to spike.
Great, thank you. Yeah, I wish our efforts to turn down the heat on the unemployment insurance conversation also turned down the heat in DC. Very, very warm. So it's easy for unemployment insurance folks to get siloed and really think about unemployment insurance, as its own thing. Indy, you work on such a broad array of public benefits assistance and know a lot about how UI fits into the overall broader picture. What are some key lessons that UI can learn from other programs, and what should other programs be learning from what's going on in unemployment insurance?
Great questions, Michelle. And you're right that often these conversations are quite siloed, though I do appreciate the report helps us break away from some of that. By highlighting the role of both sort of adjacent programs that effectively help the same population in many scenarios, even if they're not directly connected programs. One thing we discussed, and actually Matt touched on this in his sort of elucidation of how we fund state administration, and that is that states will respond to incentives, right? So there are these sort of perverse and unintended incentives at times, and we see that with other programs. It's not unique to unemployment insurance, but unemployment insurance somewhat unusually gives enormous flexibility to states, right? We have lots of federal state partnerships like the SNAP program. We have state local partnerships like housing assistance. And of course, we have also learned that you often need federal standards if you think that some of the variability that you see across states is unjustified. You think it's inequitable. And as we discussed briefly, we would need those standards to be somewhat comprehensive because you could adjust one part of the program and states would respond by potentially making offsetting decisions in another part of the program. One other thing I would note that's clear from other programs, but also from UI, is just how hard it is to ramp up infrastructure. And that's not just technology, but the human infrastructure. In some cases, it's physical infrastructure, but by and large, it's not. You really need to build a system you need for the worst parts of the business cycle. I think a lot about how if you go into like a potbelly sandwich works at like 10:30 or whenever between breakfast and lunch, it's not very busy, right? But and it looks empty. But they're going to make all their money really at the very busy period in breakfast and the very busy period in lunch, and they each turn out like 200 sandwiches in each situation, right? In each moment. And that's really how you have to think about this. You have to think about building the system that is ready to handle those key moments for which they more fundamentally, help shape the well-being of our society and our economy. Unemployment insurance isn't helpful throughout the business cycle. It absolutely is, even when the economy is doing better and the labor market is tight. One of the things you can do, you can sort of cross-train and integrate agency staff. Actually, Julia gave a great example of this in Pennsylvania. And I think that's really important to help connect people to, different adjacent programs. And we can see clearly that in all cases, the information communication technology investments have to be made on an ongoing basis. There's no savings to be had from delaying them. You will inflict the pain and raise the cost. So that's important to keep in mind. And finally, again, I think UI in some ways is doing some of this well, but simplify, right? You want no wrong door scenarios. People get the help they need and they're eligible for however they come to you. That's the goal. And that means things like aligning data definitions and systems with eligibility, ensuring that payments are correct. You heard about the chilling effect Julia raised, but some of this is really just because it's overly complex. But we see, things like modified adjusted gross income, super lucky, right? But the main thing here is you've got a term and a definition of income that can apply to SNAP in some cases, Medicaid as well, tax, et cetera. So we need to think about how we can unify definitions. And finally, again, Julia really hit the nail on the head on this, but you have to provide guidance online in a straightforward way. She particularly emphasized that it'd be mobile friendly, but you will never substitute for the need for humans to be available for complex participant situations. I say that knowing we're in an age of a burst of generative AI, and of course we should explore some of these tools, especially for caseworkers with the appropriate safeguards to make sure we can most efficiently use humans for the scenarios in which they're most helpful. But in every other situation, in not just other programs, but other situations in our own lives, we very often hit some stumbling block, and only a human is really going to be able to understand a complexity and respond in a way that gets us to overcome this stumbling block.
I think that's right. Which ironically brings us to the technology question. Hello, Till. It's good to see you. So last week, in a congressional bipartisan briefing, I raised this point that if any of you have seen the first Jurassic Park movie, and you see the computer system that the little girl uses to block out the velociraptors, many states entered the pandemic with technology that was actually archaic compared to that system, right? So Julia, you and I have worked together a lot on modernizing technology and make sure it serves the purposes of getting the right benefits to the right people at the right time. Can you talk about a little bit about the top lines that the average person needs to know about technology?
Thanks, Michelle. And actually, just to kind of touch on the point that Matt brought up here, the same applies with technology as does with UI funding, and they are intertwined in that we need to fix it now and not wait for the next economic disaster. A lot of states blamed technology for their inability to provide timely benefits during the pandemic, and technology certainly played a role in that. It was not the sole reason that the unemployment system did not initially serve its function. But now is the time to make sure that the technology meets the needs of people who are trying to access this program. Technology alone will not fix the problems of the UI system. I think we need to get that idea out of our heads. And I think we try in this report to provide a more comprehensive view on what we think is important to fix the system. But as an example of that, I think for a long time, we've looked at technology as a way to kind of turn what we've been doing by paper into a faster version using technology. But the truth is that if you use technology to paper over inefficient business practices that don't address the needs of the users of your system, primarily your claimants and your frontline staff, then really you're paying a lot of money to do a bad job, but maybe a bad job more quickly. And I think we need to take a step back and look at the actual underlying designs of these systems before we try to fix them with technology. One example of that is that we've always struggled with the fact that claimants could receive 18 different pieces of mail over a 2-day period about different determinations of eligibility related to their claim. That was never great. People never understood that. Guess what they understand even less? 25 messages in their online portal message center that all have the same subject line about determinations of their eligibility. So again, using technology in and of itself does not fix a lot of those kind of complex and confusing issues in the unemployment system itself. And as Indy said, one of the other kind of misnomers with all of this is that if you improve your technology, you need less staff. And that is absolutely incorrect. The time at which you need the most merit staff is probably when you are engaging in a technology project, when it is going live. People need a human then more than ever to deal with the changes, to understand them. And while there may be staff savings in the long term, I think that has to be viewed comprehensively with all aspects of the unemployment system, with ES, before we're looking at technology as a way to just cut staff. I think the first thing that states need to think of when they're engaging in technology projects is first really understanding where people are struggling. You can't do these projects, and you shouldn't be doing these projects without first engaging in user-centered research to determine what the priorities of that new system should be. And again, the focus really needs to be on your frontline agency staff and claimants. Obviously, employers also play a role here, and I think especially addressing the needs of your smaller employers who are less sophisticated and do not necessarily have third parties representing them is also vital. What we have seen is that these large waterfall projects, and what I mean by that are the process by which a vendor kind of builds on its own with agency participation a completely new system. And then the state flips a switch, turns off its old system, usually with some days of blackout period going on, and then flips a switch on the new system and says, oh, here's our brand new total unemployment system. Those projects have not been very successful. And usually they go live with considerable issues, and they really harm people in the process, and they harm how people view the unemployment system. The projects are also too static. They can't respond to changes that are happening, whether that's legal changes, whether that's extension of programs, and they often don't leave room in both their initial build and kind of their maintenance of the systems for actual user testing and feedback, real people showing them what does and does not work about this system. So last, I'll just say that fortunately, A lot of states, along with USDOL and the National Association of State Workforce Agencies, have begun to focus on more agile technology development, right? Trying to do this piece by piece, doing it responsively. But states need funding to do this, right? Like the states, as you've just heard, do not have the administrative funding to kind of like spread around when it comes to technology. So there needs to be a funding source for this, but there also needs to be accountability for that funding. We can't just send money to the states and say, go spend it with whatever private vendor you want to create whatever system you want. There needs to be accountability, and USDOL needs the power and different enforcement mechanisms to hold states accountable for that funding on issues of equity, accessibility, and timeliness. And so this can't just be the way we've kind of worked before, which is we hand out money to states to oversee technology projects. There needs to be more of a concerted effort to both provide assistance for what that should look like, which I think USDOL has done a great job in the last couple of years in doing, and enforcement and accountability for how those systems actually end up functioning.
Great, thank you so much. Welcome, Till. I'm so glad you could join us. So one thing about this paper that could get lost with all the other issues that we've discussed is the other programs section. But could you talk a little bit about the importance of work sharing and some of the sideline programs that help people stay employed or get back to work before they run out of UI benefits, such as reemployment assistance?
Yes, of course. Thanks for having me. I'm joining from Italy, and so it's probably as hot here as where you are. And I'm part of the group as a researcher, and so that's my perspective on several things here. And one thing is that we actually have a lot of complementary programs as part of the UI system that we need to learn more about, and that can be very effective at helping individuals get back to work. And they are also potential bipartisan favorites, because that's what we want. We want people to stay employed and get employed as fast as possible. And one of those programs that was truly a bipartisan favorite was the short time compensation program, also called work sharing. And that's part of the UI system that can help employers prevent engaging in layoffs, right? So instead of cleaning up behind the cart, right, we get ahead of the cart and we prevent those layoffs that then lead to damaging spells of unemployment and all the work that the UI system has to do. Now, work sharing can be very effective at preventing the costs of job loss. It can help employers, avoid costs of searching for employees. It does come with some costs for employers, and it's tremendously underutilized in the US. So in European countries, it's become a mainstay of the reaction of the labor market towards recessions. One freezes workers in place temporarily before the economy can restart. In the US, this program is underutilized. And the report has some suggestions of how to improve the program, but also how to provide information to states on how to do better outreach, because there are really powerful ways to reach out to employers to scale the work sharing program and help prevent massive job loss. And in past recessions, the federal government has fully funded the work sharing program, as a sign of how much potential it has, but it's just underutilized. There are other programs that act at the other end of the spectrum. So once individuals are unemployed, there's a range of programs, such as, for example, the Reemployment Eligibility Assessment Program, or RESIA, that try to funnel workers to caseworkers to help them find a job if they're at risk of becoming long-term unemployed. And these programs can be quite effective. And there's been some research showing that these programs can work, but overall, we could know much more about these programs if we were to make available better data to a broader research community to study these programs. And that's something else that the report highlights, is that one doesn't need a lot of investment in infrastructure to just come to a point where states make their data that they've been already collecting for many, many years, freely available to study not only the UI program itself, but these complementary programs. And there's not a lot of funding needed to do that, but states need leadership and a framework to be able to share this data among themselves, possibly, but also with researchers And there are some suggestions here in the report that try to help think through of how we could make data better available. And that's important for the UI program as a whole, but especially for these complementary programs that become so important when we want to raise employment and get people back to work.
Great, thank you. So now I kind of want to open it up to the audience for question and answer. So if you would like to ask questions of any of the panelists or Andy, please type it in the Q&A box at the bottom of your screen. Since I'm just telling you that you can ask questions, I will kick it off with an initial question, which is, for anybody who wants to answer. The Employment and Training Administration collects a lot of incredible data and provides quite a bit of really helpful data about program performance, about access, but obviously there are ways that data can improve so that we can better administer the program. What are your all thoughts on data collection and dissemination?
So I'll jump in. This is Julia. So while there is a lot of data that is reported out to USDOL, there's also a lot that's not. And that's not collected by the states because the systems have not been set up to require those inputs, or a state might have that information collected from a claimant, but no way to run a report, right, or actually track it. And one of those areas is demographic data. We are really lacking in good demographic data that is broken down into different areas. That's one place where advocates especially have really struggled to be able to work with states to fully understand who is not accessing their program. The second part is we don't really have data about where people are struggling in the system. When we're building these new systems, it would be really great if we could understand where on initial application do people drop off? Where do they spend the most time? Same thing with weekly certifications. That also applies equally to identity authentication. We do not have, we don't have almost any transparency about what vendors in that space are doing in terms of their data and providing who's not making it through, where are they struggling. Those same pieces are also held typically by a private entity and not by the government. And that is a big problem with our current data structure. The last thing I'll say is we have good numbers and good ways of tracking what we call kind of aging of cases in the appeal system. Right. So for those who work on the front lines of the unemployment system, you know that when there is a backlog in unemployment claims, what gets hit after that is the appeal system. We are seeing people wait months, 4, 6, 8 months to have a first hearing on an appeal of an unemployment determination. Right. And we know that from anecdotal evidence, but we also know that from case aging numbers and timeliness in that system. We don't have similar numbers for initial determinations and cases before they reach the appeal system, right? So when we talk about timeliness, we don't know how long someone has been waiting for determination on their basic eligibility, right? So the same way that we track that in the appeal system, I think we need to track that at what we call kind of the service center or call processing center level. And that, I believe, is one of the proposals in the report as well.
I'll throw in on a sort of micro data issue that I hope Andy tells me has been fixed, but if not, it should be. So in the pandemic, early on, there were these spectacular delays in getting benefits out, long waits to get onto the PUA program, long waits to process people through the regular UI system. When DOL issues its weekly initial claims reports, oftentimes what was reported early in the pandemic was not individuals claiming benefits, but weeks of benefits claimed, including all of those back claims. Add that all up, and it made it look like early in the pandemic, there were way more people claiming benefits in any given week than there were unemployed individuals, because in that given week, what it counted was all those weeks of back payments. So if somebody got 10 weeks of payments in that week, they would count 10 times. Hopefully that's the kind of thing that can be fixed going forward, so policymakers actually know the number of bodies who are collecting benefits as opposed to the number of weeks of benefits that somebody might be initially collecting, especially when claims spike, because that led to unnecessary confusion and lots of numbers being thrown around that for literally no real comparison to reality.
Yeah, I can say a couple of things on this topic of data. Yeah, to that direct point, it's one of the strategies in our transformation plan is updating our developing a new report on collect data on the number of unique individuals collecting benefits in each week for the state UI programs. That's something we are working on. To the demographic point, we actually recently issued a Federal Register notice seeking information about some enhanced demographic data collection that we are proposing. And for lots of things have changed in UI. And so also in our roadmap is looking at our the way we report timeliness, the way we report how people are their claims are decided, how we use the word adjudicated in the UI system, how we measure timeliness and several levels of performance. Looking at those in this new post-pandemic environment, especially with some of the new integrity controls, how we need to look at those measures again. All that's on our roadmap as part of our transformation plan in terms of enhancing our data. Just a few minutes ago, we issued guidance announcing that we are phasing out our old unemployment insurance reporting system, which was definitely a barrier to more complicated data analysis, and starting to replace it with a cloud-based system that will be used in the States. The first part of that will go live in early August. So that's a necessary precursor to some better, data reporting to the public, is the better data collection by the states and moving that into the cloud. So we are, that's supported by the American Rescue Plan. So the data that we're doing, that's a huge priority for us.
Great. I'd like to jump in there real quick on this topic. At the California Policy Lab, we were the first, because we were working with the Employment Development Department, to be able to calculate the actual number of people who were receiving benefits as opposed to the number of claims that were being processed. And that was because we had access to the microdata through a corporation with EDD. And so on the one hand, I'm a big fan of fixing the problem in the reporting. On the other hand, eventual new issues will likely be detected by researchers who are in the data every day. And when I mean data, I mean microdata. So one thing that's important, in addition to fixing the reporting, right, is also fixing the access to the microdata so that we can always stay alert and figure out these issues as they come along.
That is why we love researchers. So I want to get to a question in the chat. Doug Holmes, a member of the task force, asks the perfect question. What is the key to getting appropriators to address the long-term fixed costs associated with automated systems on which the system relies? I'm going to take a little bit of moderator's privilege here and say that I really think it might make a lot of sense to have a permanent technology line item in addition to the regular formula distribution, because technology is one of those fixed costs that doesn't change as dramatically across states as some other costs do. But I'll open this up to the group. What are your all thoughts?
I think whatever we're doing now is not working, right? The appropriators have made painfully clear over time that they're going to appropriate some amount that I think is widely agreed is insufficient for this question, for technology, for anti-fraud stuff. So I think we need to come up with another methodology. I talked about some of those other options. Those are not without their downsides, including because they increase costs. But if you want to appropriate more money, increasing cost is part of the project there.
Any other thoughts?
Well, I'll just add that politically, obviously, we need people to see the benefit for this more generally. That is a better funded administrative capacity that can be helpful for employers, workers, and and taxpayers alike. These are obviously overlapping groups, but I think that is important. We know how the appropriations process works. I've been there trying to convince the appropriators to fund things more generously for the unemployment insurance system. And Doug has certainly played a part in helping there, but people have to see that as beneficial in the public interest. So in addition to getting right the sort of model wonky details, which I don't know if this would quite be putting words in Matt's mouth, but anything would probably be better, or almost anything would be better than what we're doing now. We do need to build that broader political support for people to understand that this is something that helps the economy just sort of function more smoothly, that is a well-administered unemployment insurance system.
Great. So I have another question of my own, which probably should have been included in the original list of questions that I offered to participants here. We always leave the financing question to the last. and I think it is because, experience rating is incredibly complicated. There's a really good paper out there by Miller and Povasevich, which explains the challenges with the current experience rating models extremely well. But I think we do need to think about financing and taxation, because you can't do any changes without figuring out how to pay for it. So what are some of y'all's top line thoughts about experience rating and taxation?
Well, I'll just start this, Julia, by saying I think there's several different proposals in the paper that speak to this, right? There's been a lot of thinking on this topic. There are varied opinions about what we should do here. I will say, as someone who is in the trenches with workers, one of the challenges of experience rating is that employers don't understand it. And I think it causes kind of misaction and their handling of claims, and when they get involved and how they get involved. And I think we've seen a cottage industry kind of that has been created, especially since the recession, around challenging claims purely for experience rating and really nothing to do with somebody's actual underlying eligibility. And so I do think it creates some perverse incentives here. I understand that we want employers engaged in the process, but I do think that it causes a lot of unnecessary work for the agency and how employers respond based on experience rating concerns, and also causes undue harm to workers who should be getting benefits, but may not because of how employers have acted in response.
I'll just throw it. I think these things, I think financing broadly of especially some of the benefit expansions that are described in the report that are embedded in many of the proposals that the report sort of makes reference to from lawmakers, policy experts, all that, and experience rating are kind of two different things necessarily, right? The idea of experience rating is what's the nature of the taxation system that supports the program's benefit costs, and should that mostly be borne by employers who lay off individuals, or should it be more broadly spread across all employers, right? That's the sort of nut of that. That's separate from how do you pay for bigger, longer, more benefits to more people, that is sort of the hallmark of some of the benefit expansion proposals that the report sort of recounts. That's the real political problem, I think, behind those sorts of benefit expansions. It's not like, how do we shift around the money that's already flowing through the system to support benefits? It's how do you account for the dramatically increased costs that would be associated with those benefit expansion proposals? And, quite frankly, I think that's actually one of the strengths of the report. It offers a, pretty clear-eyed view that there are costs to expanding benefits, and there are political costs because those costs vary a lot depending on what the nature of the state is. So if you want to force low benefit states to pay more in benefits, guess what? Those happen to be red states. And there's a political problem with sort of forcing, especially one type of state, to do something that makes it less likely that that's going to make it through the political process in DC. And that's just, kind of a fact of life. But I think it's to the report's credit that it kind of reviews that and basically says, here's the deal. So.
Exactly. So one of the co-authors of the paper I just mentioned popped up in the questions and answers here. Rob Pavasovich is asking, did the task force consider federalizing the system? We did, and we took it seriously because a lot of papers have called for it, including Steve Wandner's book and the Dubé paper, which was very interesting and helpful. Ultimately, I think the task force members broadly were concerned that it would be really, really difficult to unspool the system we currently have, and there's no agency that is really prepared to take that handoff at this moment. But I'll let other task force, or I'll let other panelists weigh in on the question of federalizing the system.
I agree with your analysis, Michelle.
And this is Julia. I'll say, I mean, that is certainly, I think, where we ended up, and for good reason. And as somebody who helps people benefit public benefit or navigate benefit systems and works as at an organization that does that more broadly, it's not like federal systems are free of issues either, ones that are fully federalized. So I think where we landed on this was really looking at the need for more uniformity across states that would allow more support from DOL, maybe some centralized systems at some point. But that's really difficult to do in the current environment because of the incredible variety in state eligibility, and seeking some uniformity is kind of the first step in that. I think anything that makes it, for a kind of indie reference, the no wrong door approach, right? One of the downfalls of the 53 systems is that there are lots of wrong doors for claimants to enter. And they don't know which door is going to pay them at all, which door is going to pay them more money, and anything that allows folks to, at some point, more seamlessly navigate those different systems. And I'll also note, when you have 53 different systems, you often have 53 different systems that a fraudster with stolen identity can try to access, right? If you had, one door accessing all those systems, then I think there's a lot more we could also do around fraud prevention. But there's a lot that has to happen first before we can move towards any of that.
You are so right, Julia. I mean, I think, even just harmonizing, basic concepts like what is a week. I say this all the time. Those of you who've been on these calls with me are sick of hearing it probably, but some weeks are Monday to Sunday, and some weeks are Sunday to Saturday. And in some states, 26 weeks of benefits means 26 times the weekly benefit amount. And in some states, it means 26 calendar weeks. I mean, just harmonizing the way that we think about basic concepts, I think, would be super helpful and also super challenging to figure out. Going back to the Q&A, Rob Pavasovich also had another question for Till, specifically about why is workshare underutilized?
Great question. I'm going to take my moment to briefly come back to experience rating. With my lens of a researcher, we offered the state of California to look into experience rating, and especially into distributional impacts of changing the law, because the California system is extremely regressive, meaning that low-income workers pay a higher share of benefits pay a higher share of taxes than they get in benefits. And it's a bit of a political minefield at the state level. And so this is an area where there could be real federal leadership in just understanding what the current system is actually doing. As Julia was mentioning, it's likely that low income and other vulnerable workers are more likely affected by the fighting of claims, and they're already paying a higher share of taxes in some states. So the federal system could have a real role in trying to help us understand what the different options, alternatives could look like. In terms of work sharing, There's research out there that has been funded by DOL that's really great. A wonderful study by Sue Hausman and Catherine Abraham and others that show that simply telling firms about the work sharing program raises awareness, and showing that a lot of those who actually use the system are very happy with it, but they just didn't know about it before. And so lack of knowledge might be one thing. The other issue seems to be that firms are paying benefits to workers, and so it's simply have to go to administrative trouble to applying for work sharing, and that relates the same issues that workers have with the UI system, firms have with UI systems. So simplifying work sharing applications is key. And also, I think we need to, and the report spells this out, think about subsidizing firms who are engaging in work sharing, because part of the benefit is going to workers and the labor market and society, but firms are bearing the cost in terms of paying for benefits and applying to the program. So work sharing is a program where there are some very helpful recommendations in the report, including helping to subsidize employers.
Michelle, if I could just add one thing, from the worker perspective, there's actually a lot to be gained from participation in WorkShare STC, but that is especially the case when employers are able to be the ones filing the weekly certifications on behalf of workers, right? That cuts down a lot of confusion. That is like a direct source of information without it having to go from employer to claimant to agency. But a lot of states are not set up to do that. At a somewhat recent convening that USDOL had, I got to hear a lot about New Hampshire's system, which does allow employers to file the weekly certifications, and it's one of the reasons they think they have a lot of take up, and it's been a really effective program. And so thinking about aspects of STC like that and how we can make it a smoother program for all involved, it's good for a company to be able to hold on to their workers, right? Like we want people to stay connected to their employers. And one of the things that is most difficult in reporting, you're doing your weekly certifications as a worker, is trying to report partial income. So if your employer is the one having you on a part-time schedule or some sort of partial schedule, they should be the one reporting your wages to the agency, not the claimant. And I think we need to look at how to support states in having STC systems that can consistently function that way.
I think the legal issue there and why it's very hard for states is because employers are not in a position necessarily to know when their employees are employed outside of the work sharing arrangement, and that income needs to be reported also. So I think that's where the
So I'll just say from New Hampshire is that their director said that they've had, in all of the years they've been doing this, maybe one case of fraud where someone didn't report earnings from elsewhere, and that with good instructions to employers and to claimants, making this simple and clear. I think there's ways to work around that. I understand that concern, but I think there are ways to address it.
Great. I want to highlight a comment that was in the Q&A from David Balducci that we also considered with regard to financing the possibility of including contributions by workers, which I know is something that I've been interested in, David's been interested in, I think Stephen Wandner wrote about in his book. So that's something that that continues to come up and is worth discussing. I want to get to a question I had on sort of my back burner here, which is reemployment, better connecting unemployment to reemployment, which I think is an important key. And if we had a more solid connection between unemployment and reemployment, it would effectively solve a lot of the concerns that folks raise and have raised about unemployment and generous unemployment benefits. Any reactions to the state of the connection between unemployment and reemployment?
Well, I'm going to jump in and say that that's certainly an area where it's a no-brainer to improve, since we could be doing a much better job. And I think states want this, and providing states with some kind of blueprint that seems to, has some evidence behind it would be really helpful. Um, and there's, at least in California, but in other states as well, right? There's different systems. There's the UI system, there's Wagner-Peiser, there's WIOA funded training, there are other training programs and so on. And participant lists are not shared among these different units. So just reaching out to UI claimants with some information where other services could be available would be a straightforward thing to do. Different states do it differently, and some do it better than others. But there's, I completely agree. There's huge room for improvement here.
There's also bipartisan interest in that. So the RESEA, Reemployment Services and Eligibility Assessment Program, has been ramped up with basically this goal in mind, right? To sort of identify the people who need the most help to get back to work and provide them the services that they need to do that. It's actually one of the sort of rare bipartisan supported proposals on Capitol Hill in this space. So, there's options that have drawn interest. Like Till said, I think there's a lot more that can be done. Work sharing, I think, is sort of motivated by that sort of thing. The report talks briefly about reemployment bonuses, which were discussed and actually implemented in a couple of states during the pandemic. So, there's options and things for further study on that front.
Yeah, I could add a couple of pieces. I do think this is an area where we have momentum, through the Reemployment Services and Eligibility Assessment program. We have a lot of initiatives underway to strengthen the success of that program. When it comes to measurement, I've heard that a couple of times. We're implementing performance measures for that program to see how many people that go through RESEA end up, getting back to work that are aligned with the WIOA performance measures, so they're easy to states, to understand. And each state that's participating in WIOA, they are required to have causal evidence, for the positive impact of their program. There's some, seminal national evaluation of the program, but each state has to provide its own causal evidence, for the program. And in terms of, some policy areas, I think someone mentioned the idea of RESEA being for individuals that are likely to exhaust, benefits. That's something that's evolving. Over the last couple of years, have been riders that have allowed states to expand RESEA eligibility to all regular UI claimants. And in our transformation plan, we talk about that being a permanent proposal, that would be expanded to, all UI claimants, given the positive impact that RESEA services can have. So certainly, I think that's an area where, let's say, we don't have to reinvent the wheel, but we want to strengthen, some momentum we already have. And like Matt said, something that has demonstrated some bipartisan support.
I'd love to jump in and just use this as an opportunity to talk for a second about work search requirements. Part of reemployment has been requirements now on eligibility in the UI side for completing weekly work searches. And one thing that we talked about a lot in the group, and that I think was in the proposals, is that work search has not modernized, right? How we ask about work search, what we ask people to report, does not fit the way people currently search for work, right? And does not take into consideration what sort of work is available to them in what areas. And really what it ends up being in a lot of states, especially in modernized systems, where all of a sudden you're required again on your little phone to report extensive detail about 5 or 6 different work searches during the week. It really just leads to many more disqualifications, and I don't think does anything to increase reemployment. I think you see that borne out in the data for how work search has affected eligibility. And so I think we need to really come back to, what are we trying to capture here? What are we trying to motivate people to do? And really take into consideration how people look for work now, and when we want them to. Do we want people who are on some sort of temporary leave to need to search for work when they have a really good job they want to be able to go back to, whether that's a partial layoff, whether that's a leave of absence for a short-term health issue. So if we're going to require people to report back on work search, we need to look at that, I think, from its base again, and not just what I think is the misplaced assumption that if we don't require people to report all of this, they won't look for work. I've represented over 1,000 claimants in these systems. Every single one talks about how they want to find another job. That is their top priority. And so I think we need to move away from this assumption that people trying to collect unemployment are not looking for work and won't return to work if you don't require them to report about it.
Great. So we're just about to wrap up. We're about 9 minutes from the top of the hour. I want to throw out one last question, and that's, so what? We just put this paper out into the world. What do we think is the path forward? What is politically feasible? What do we think can actually happen here?
All right, I'll take a whack at this. So I think the report tees up a bunch of technical things, a bunch of some of the stuff we've talked about. The Ministry of Financing, I think, is something that is a real live thing. It supports some of the legislation that's already being considered on Capitol Hill. Like I said before, I think it also kind of tees up some of the difficulties and roadblocks, political, cost-wise, otherwise, to a lot of the more dramatic things that some people would like to do within the UI system. In fact, I think how the report kind of goes through and includes reference to previous bipartisan reports commissioned by the Department of Labor over my lifetime, basically, and says, hey, this resembles proposals that were made in 1980 and 1996. That gives you a sense of some of the uphill battle of some of the more dramatic things that are listed here in terms of benefit expansions, obvious tax hikes, you name it. So I think what we're left with is, like I said, I think the report does a very good job of kind of teeing up some of these options, but also giving readers, if they're somewhat informed and can read between the lines a little bit, a sense of some of this is doable, not all of it is doable. And part of the reason why it's not doable is the same sorts of reasons that have prevented similar proposals over time from making it across the finish line. So, I think it does a very good public service in that sense. But people should understand, just because it's in the report doesn't mean that Congress is about to jump on this and it's whoever the next president is going to sign it into law.
I think that's right. I think it's more of an informational document than a call. It's definitely not a call to action, given the Academy's limitations on that. Any other final thoughts, or I'll send it back to Rebecca.
So I'll just say something quickly. I mean, on the flip side, it's a call to action, arguably, by laying out the challenges. And again, I think there is a lot of agreement on some of those. And I think that as far as so what, this is just not an issue that will ever get the attention it needs, as we discussed earlier, certainly not at the right time, but it generally doesn't get the attention it needs. Here you have a program that was arguably a significant reason why the United States economy bounced back from the pandemic, but only through lots of emergency measures, as fast as it did bounce back. And yet there was obviously a lot of money that some people sort of took advantage of the program and took, but also a lot of people who didn't get the help in the timely way that they deserved and needed. And so I think that this is one of those things that's insufficient, but certainly helpful in focusing policymakers' attention on the issue. And you just don't know when the next opportunity will arise. So you want to be ready, and you want to have thought through things, and where possible, build consensus. And that's where I think a report like this can be helpful.
Just add to that over the time, we really tried hard to really lay out different perspectives and make a list of the various reform proposals. So this is a great place to start if one wants to think about sort of bipartisan reform, right? And so I second that. If this report helps us to be ready, right, when the time comes for some reform.
Well, I can't think of a better note to end on. And Michelle, just thank you so much for your wonderful leadership and for putting together this wonderful event today. Thanks so much to all of our panelists, Matt, Julia, Till, Andy. Andy, thank you so much for joining us as well from the DOL perch. I just want to give us a last plug. We had some folks asking in the Q&A, where can they find the report? And I think Michelle shared a link to it in the Q&A, but you can find it at nasi.org. It's right there on the homepage as the latest report that's featured. So don't just end this conversation and hang up on this Zoom and say that's the end. Go check out the report. There's lots more where this came from. And just another huge round of thanks to the task force for honestly what is a heroic effort, bringing together so much bipartisan common ground. And as Till said, just such a wonderful place to start for policymakers looking for that roadmap. So Michelle, thank you so much again for your fearless leadership, and thanks to everyone for joining us today out there in cyberspace. And I hope everyone's staying cool in this record-setting heat. And with that, we'll thank you for joining and say that's the end of today's event. Thanks, everyone.